Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. So let's take a look at the chart and what I'm potentially going to trade today. Good morning, traders. How are you? It is Friday. We have made it to the end of the week. I hope you've had a great trading week, guys. Please leave a comment. Let me know how your trading's going, or if you need help with anything, leave a question. We'd love to hear from you. Today is Friday, the 10th of June. And as always, guys, we're going to look back at yesterday's trades, going to look at today's potential trades and the important news for today as well. So let's start with yesterday, guys, and we only had the one trade idea, and it was this. It was the euro against the Canadian dollar, and we were looking to buy this market, okay? And we were looking to buy this market for these reasons. So the two important zones in this market, as I explained yesterday, is this zone and this zone, all right? And as you can see, price is just in a ranging market, a sideways market. Hit the high, hit the low, hit the high, hit the low. All right. And because we had this bullish candlestick pattern bounce off of these lows here, yeah, we were just trying to take price back up to this blue line to start with, and then even this last high up here. Okay. So that was the idea, guys, just to buy this market for those reasons. You can see it hit our blue target here, guys, but that was the news. All right, but let's look at H1 to see how it actually reacted to the news. Okay. So, yeah, our trade idea, guys, if you remember, was for price to break this grey zone, retest it, and then come back up to this blue line here. Okay, and that's kind of what happened in a very news related way. Okay, so as you can see, guys, this is when the news was released. Yeah, this candle here. Okay, and then it shot up to our blue line, shot all the way down, and now it's come back up. Yeah, quite common after news, guys. It becomes quite whipsaw-y. We don't really have a direction. Okay, so for me personally, guys, I just stayed out of the market yesterday. Okay, I stayed out because of the news, guys. It was big news, and if you're trading the news, it's a bit of a lottery, guys. But I might do a tutorial on how to react to the news. But yeah, if you were trading this yesterday, guys, you could have got in on this. You know, arguably you could have got in on the candle, this first candle. Okay, it broke these highs, it broke our grey zone. Okay, and then we had a slight retrace down to the grey zone and then back up to the blue line. Yeah, you'd have had to put your stop below here, mind, but you would have got a risk to reward if you entered here of about 1:1, guys. Okay, so maybe some of you took this trade. Let me know if you did, guys. All right, but like I say, guys, I stayed out of this pair. Yeah, it just become too volatile. Okay, you could have even got back if when price retraces all the way back down to here, guys. Yeah, and you see these wicks. Guys, if you enjoyed yesterday's recap, then please smash the like button. Yeah, it really helps support the channel. And also subscribe. Come join us at Simply Forex. Subscribe to the channel and then smash the notification button. That way you'll receive an alert every single day, guys. All right, so go ahead and do that. Right, so trades for Friday, the 10th of June. We've got 3 potential trades. The first one is this. This is the Aussie dollar against the US dollar, and we are looking to short this market. Okay, the reasons for this are as follows. So as you can see, guys, price was in a downtrend. Okay, lower highs, lower lows, lower highs, lower lows, and until this last high here is broken, yeah, then we are still in a downward structure, okay? And as you can see, this didn't break. Yeah, this high didn't come up here. It didn't break, guys. Okay, so we are still in a downward structure until this last high is taken out. The structure is still in a downtrend. And as you can see, guys, yeah, let me just put that line in. So this is still intact, all right? And then we had this candle react at that level. And ever since then, guys, it's sort of been, yeah, coming down. And also these couple of areas here which were important, they were broken as well. And we got this bearish candle form yesterday. So everything's telling me to short this market, guys. Yeah. Remember, we need reasons to short or reasons to buy a market. And this is my reason to short this market. Okay, so I'm looking to short, and I'm just looking to take price back down to this blue line here, guys. This 7050 level, this psychological level, which corresponds with these last lows and this area here of sort of support and resistance. Okay, so yeah, looking to short this market, guys. Let's look at H1 for execution. Right, guys, so I have got this grey zone here. All right, so in an ideal world, price will come up to this grey zone. A bearish candlestick pattern will form. That's our trigger to enter. We'll get in the trade, and then we'll take price back down to these last lows. Okay, this 7100 level. We'll close 80%, and then we'll leave 20% to run down to our higher time frame target. Okay, guys. So yeah, that's the first idea. If price, well, because of the daily candle, guys, it's so bearish. All right, price may only retrace, let's say, to the moving average 20, yeah, this yellow line here, and then we get a bearish candlestick pattern. Okay, I would be willing to enter on that as well, yeah, because the daily candle is so bearish. Okay, so if we get a bearish candlestick pattern happen around here, again, we'll just take price back down to this 7100 level, and then we'll close 80% and then leave 20% to run. All right, guys, but yeah, Aussie dollar, US dollar, we're looking to short this market. Next trade is this. This is the New Zealand dollar against the US dollar. And obviously this is highly correlated with the Aussie dollar, US dollar. So just trade the one that gives you the best setup. All right, but it's a similar story, guys. Yeah, so price was in a downtrend. Yeah, lower lows, lower highs, lower lows, lower highs, lower lows. And again, this area here is important. Okay, so this is the last high. All right, and again, guys, if this high isn't taken out and price comes up here, then we are still in a downtrend. And as you can see, it held. Yeah, this last high has been holding here. All right. And then eventually, we've even got a break of these sort of lows here. And then we had this bearish candle form. Okay, so for all those reasons, very similar to the Aussie dollar, US dollar, we're looking to short this market. Yeah, price is still in a downward structure. We've got a bearish candle on the day chart. And if this was going to be an area of resistance here or here, they have also been broken now as well. Okay, so we're just looking to take price back down to this blue line or even this psychological level here at 6,300. All right, but let's look at H1 to see how we get in the trade. And no surprises, guys, it's a very similar story to the Aussie dollar, US dollar. So in an ideal world, price will come up to this grey zone. Yeah, we get a bearish candlestick pattern form. We enter the trade, okay, we take price back down to the last H1 low. Excuse me, guys. We close 80% of the trade, and then we let 20% run down to our higher time frame target. Okay, guys, if that doesn't happen, again, price could react below this grey zone. Because the day candle is so bearish, again, we could get a candlestick pattern bearish candlestick pattern form here, and then we take price back down to this low and leave 20% to run. All right, guys. So yeah, Aussie dollar, US dollar, and New Zealand US dollar. We're looking to short both of these markets, guys. The third trade we're looking at today is this, the Canadian dollar against the Swiss franc. Okay, so reasons for shorting this market are as follows. So price was in an uptrend, yeah, higher highs, higher lows, higher highs, higher lows, higher highs, okay, and then price come tumbling down. So as soon as this low here is broken, price structure has changed. We are now in a downtrend, okay? And as you can see, guys, this was the last high in our downtrend, and it hasn't been broken, all right? So price come all the way back up, but we are still in a downtrend until this high here is broken. And it isn't broken. Instead, we get a very strong reaction, and we get a bearish engulfing candlestick pattern. Okay, so yeah, so on the basis of that, guys, we're trying to short this market. Okay, so first of all, guys, we just want to take it back down to this blue line here, guys. Okay, longer term, yeah, we could take it back down to these lows here. Okay, but our target for today is just this blue line here, guys. Okay, so shorting this market, let's look at H1 for our entry, our execution. So guys, yeah, this grey zone is quite a large grey zone because we've got, you know, this area, this area, this area. Okay, so for all of these reasons, yeah, the grey zone is quite large. All right, and we also have potentially this as last lows, or this as a potential area as well. Okay, so we've got all of these different areas to consider. So that's why the grey zone is quite large. But what we want to see, guys, is price retrace into here somewhere. Then we want to see a bearish candlestick pattern form. That's always our trigger to enter. We enter the trade. We take price back down to these lows first of all. If we get a risk to reward of 1:1, we close 80% of the trade, and then we let 20% run down to our higher time frame target. Okay, guys. So yeah, that could happen. Also, because of the bearishness of our daily candle, what we could see, guys, is this area here. Okay, so these are sort of the last lows on the H1. Price could break these, come back up, retest this zone before it comes back down to this blue line. Okay, so a couple of ways to trade the Canadian dollar, Swiss franc, but short. We're only looking to sell this market, guys. All right, guys, so yeah, they're the three trade ideas for today. Let's take a look at the news now. Guys, if you're enjoying this daily morning analysis and would like to receive it every single morning, Monday to Friday, then please subscribe to the channel and smash that notification button. That way you'll receive an alert every single day and won't miss a single morning. Okay, guys, so news for Friday, the 10th of June. Okay, as you can see, guys, nothing overnight for us to consider. The first piece of news that we're interested in, guys, is at 1:30 London GMT, and we've got core CPI coming out of the US. Okay, so this could move any US dollar pair. At the same time, at 1:30, coming out of Canada, we've got employment change. Okay, so this could be big news for the Canadian dollar. So if it's far better or far worse than expected, then this could really move the Canadian dollar, guys. Okay. If we carry on down at 2:45 London GMT, coming out of the euro, we've got the head of the European Central Bank, Lagarde. She's speaking. Okay, so she can really move the market, guys. Okay, so yeah, when she speaks, the euro moves. Okay, so must be aware of that, guys. All right, and after that, guys, no other 3-star rating news that we are interested in for the rest of the day. All right, guys, so yeah, I hope you've enjoyed the vid. If you have, please subscribe, like, and share. I hope you have a fantastic trading day and a wonderful weekend. And I'll catch up with you on Monday, guys. See you later.